Good afternoon. I'm Tim Nyland. Today we're going to look at valuations in the FinTech space. I've received many questions about the earning certain portfolio member Global Payments. And in order to address what is impacting Global Payments, symbol GPN, we need to look at the valuations in the entire payment space, as well as the mean estimate revision history for FY1 and FY2. I'm going to split up this FinTech space into 5 different groups and address each of the valuations in pairs. Plus, we'll look at Western Union for a total of 11 stocks today. The analysis that I'm going to show you is indicative of how you would address a client or anyone calling you on the phone asking what is going on with a specific stock. Before we get started, please like, comment, and subscribe, and come back every week for more videos on investing strategy and making the most of Zacks Pro platforms. If you'd like to do the kind of analysis you're going to see in this video, then you need to have a ZAT Portfolio Manager subscription, which includes both Zacks Advisor tools and the Zacks Research System. Let's go ahead and get started. What we're going to do is we're going to tab over to Zacks Advisor tools, where I actually have a watch list set up. And I just did this today of the actual FinTech payment space. And it's actually a little bit broader than just FinTech payments, but that's what I named it. And I wanted to just briefly walk you through these 5 different groups, right? So we've got our credit card networks, right? These are the companies that manage credit card networks. They don't issue the cards. That would be Visa and Mastercard. Obviously, these are kind of your original FinTech players. We've got the oldest FinTech player of all, Western Union. I think they've been around since literally the 1850s in some capacity. We've got business merchant processing as well as some light payroll. And that would be indicative of our earnings certain family of equity model portfolio members, Fiserv, as well as Global Payments, you can see right here. And then we've got digital payments, cash wallets, and money transfer services. Obviously, in the money transfer service department, that would be our Western Union that I've already mentioned. And then obviously the digital payments and cash wallets would be our PayPal and Square. I've also included 2 speculative global digital payment systems and cash wallet services, StoneCo Limited and PagSeguro Digital. And the reason I'm including this is because if you lift the hood on this FinTech payment space, you are going to see new companies popping up all over the world and competing with the likes of a lot of the majors. And specifically, I picked on Brazil and South America because StoneCo and PagSeguro are competing with Mercado Libre in that space. And what I want everyone to see is how correlated these names are. On up days, most tend to be up. On down days, most tend to be down. And you can see the sea of red in here. This is obviously current price range relative to 52-week close. So all of these names have been under pressure. So what I want to do is I want to go ahead now and go into the research system and literally tackle each one of these companies very briefly. This is something you would do if you were asked about the performance of any one of these types of names. You'd want to go through this list of stocks and this type of an exercise, just to ensure that it's not something company specific, but rather something that perhaps maybe is indicative of what's going on with the broader industry or a group of stocks. So we'll go ahead and jump into Zacks Research System. Before we move on, I wanted to let you know that Zacks also offers a mutual fund rank. And you can see on the screen beneath the Zacks Research menu in Zacks Advisor Tools, we have the full mutual fund research coverage view. And we also have available the sub-factor scores for the mutual fund rank itself across all 3 of the models that we support. It's actually built on the award-winning Zacks equity rank aggregated to the fund level, along with other factors that are unique to mutual fund performance. Unlike most mutual fund ranking systems, the Zacks mutual fund rank is future-focused, not based on past performance, and it actually works. Our number 1 ranked funds have historically outperformed their Morningstar category averages, and this outperformance has been durable for 4 to 5 years before mean reverting. Learn more about the Zacks Mutual Fund Rank and how to use it in your process with our free guide. Just click on the link in the description below to get your copy now. And you can see I have basically all 11 stocks loaded up in here into the ticker symbol monitor in some capacity. No particular order, although it looks like I can go ahead and bump through from the very top. So we'll start with Global Payments. This is obviously one of our earnings certain members. And this is what has some people concerned, right? I've had a lot of emails and calls about Global Payments. And what I'd want to call everyone's attention to is its participation here in the lost decade And you can see that valuation catch up that literally played out for almost 6 years, where the stock went sideways and literally earnings more than doubled for that valuation compression. And so you do receive opportunities like this from time to time on earning certain names where you get this type of a valuation compression, but we just need to make sure that it's not something, systemic going on within the company itself, but is more industry wide, which would be more indicative of something we wouldn't tend to worry about as much. Okay, so what I want everybody to focus on are these growth rates right here, specifically for FY1 and FY2. Only when you see some sort of real cyclicality in FY1 or FY2 would we really focus on FY3. Outside of that, I tend not to look at FY3 estimates as much. They just tend to be pretty sparse and too far out for us to get too concerned about. So for global payments, rock solid growth, still 27 and 19%, and you can see that earnings certain portfolio member characteristics here of that rock solid earning stability for global payments. Quickly, we're going to bump through, go to Fiserv next. You can hardly tell that we shifted the stock. It's about a mirror image to global payments, and you can see that same participation in the last decade here. And then obviously multiple expansion ever since 2012. We've been literally flat here for 2 years, but we've had rock solid growth, 26, 16, and 14% growth, just spectacular in that space. Okay, American Express, a lot more cyclicality. Remember, American Express not only manages their own network, but they also issue their own cards and do their own loans. And you can see the cyclicality in this business, and you can see that here in the estimates, coming off of 72% increase off of the bottom of the trough, rebounding to 5% and then 16%. Same thing with Discover Financial, much more cyclical, and you can see that's definitely reflected in its valuation. We lag these earnings by 1 year, and you can see that this stock literally trades at where those earnings estimates are forecast to be. So 390% coming out of that tremendous trough, a decline of 25% to 3%. So real growth struggling here off the back of this COVID recovery period. Moving on to Visa, you can see a lot more stability here, 19, 18, 70% growth, just solid, but still, right, that decline in price that we've seen with both Fiserv and global payments, right? So Visa not immune, looking more and more industry-wide as we go through this, not impacting perhaps the card issuers as much as everyone else. And then we've got Mastercard. When you think of Mastercard versus Visa, again, I want you to think of Mastercard being a lot more global in nature than perhaps Visa. And when we talk about what's going on specifically in this industry, perhaps the end of the COVID stimulus payments, specifically is helping, Mastercard not decline as much in value as say a Visa. 28%, 27%, 23% growth. So still spectacular growth forecasted for FY1 and FY2 and FY3. The interesting thing in here in a few minutes, we're actually going to look at the revision histories themselves to see and actually look behind these estimates to see what the revision trend has been for FY1 and FY2 over the last year. And that's where things are going to get real interesting, okay? So when we start moving into the digital payments and cash wallets side of the FinTech space, obviously we know PayPal has been under some significant pressure here. Nice growth still, 26, 25, and 33%. And although PayPal did offer some soft guidance for next year on their most recent quarter, they have been slowing, specifically the cash wallet side of the business. Okay, same thing with Square. Square has a bank charter, slightly different business model, but all in all, still solid growth, 21, 59%. But you can see here it's stalled out as well for pretty much all of 2021. It really just hasn't done much. Okay. Then we get back to Western Union. These are the guys that started it all. And I know this is kind of comical to put this in the FinTech space, but it really is the first FinTech stock, if you will. Really started out at some form back in, I believe it was the 1850s, if not the 60s. But you can see the importance here of just keeping your eyes on Western Union, right? It still competes in that money transfer space. And we are literally sitting at what we would consider the bottom lows pretty much for the last 10 years. If you draw a line back here, trading at about about an 18 multiple or so. So we'll look at this obviously in a little bit more detail. Wanted everybody to just get a quick feel for the price and earnings activity. Again, we're answering what's going on here. And what we want to do now is move on to Stone Co. Again, the behavior of Stone, just like PayPal. When you start looking at Stone Limited and PagSeguro, you've got to really pay attention to what's going on in South America. Not only is the payment space under pressure overall, but we've got issues with the government down there in Brazil cracking down. So it's hitting Mercado Libre, it's hitting Stone Co, and it's hitting PagSeguro. And you can see that looks just like PayPal as well. So we'll look at the implications of that compression here in just a few minutes. But what I want to do now is focus in on the EPS estimate revision trend. And this is where things will start to really make sense as to why these companies have stalled out and many are actually on the decline. And the idea is I want everybody to look at the trend, right? So this is our fiscal year 1 estimate and our fiscal year 2. So this takes us out to the end of this year and then obviously out to the end of 2022. And what I want everyone to see is that global payments, although it's growing, right? It's growing at, and we'll just go back here really quick so you can see what I'm talking about, 27% and 19%, right? Which is spectacular growth. It's literally, 3 times the average growth of the S&P 500 in terms of earnings. When you look at the estimate revision itself over the last 12 months, for an earnings certain type company, these are the companies that tend to continue to just be revised up month after month after month. Global payments has literally sat flat, okay? So although we have a nice trajectory of growth, there hasn't been that upward momentum each and every month like we see in those macro tilt stocks and a lot of our other ECP names. We've only gone up 1.2% on our FY1 estimate for December 2021 in the last year. And we're actually down 1.5% for F2, which is December 2022, okay? So we see something similar when we go to Fiserv, right? It's only up 3.7% FY1, 3.5% for FY2, okay? American Express up a whopping 36% for F1, but look at the slowdown in revision history for FY2, right? We're only up 7.6%. Discover Financial Services is most impressive, and it's the one that's coming out of that deep cyclical trough. Remember, it's trading at one of the lowest valuations relative to American Express. There's really only 2 in that credit card issuer space, 137.5 versus 34%. And when we look at Visa, right, only up 4.4 and 3.4%. Note the trend is down. And look at Mastercard, only up 1.6 and 4.5. So literally just sitting flat. So across the board, where I'm going with this is that industry-wide, we've literally just had this tremendous slowdown in the momentum of EPS estimate revisions themselves. Growth trajectory overall remains intact, but we're just not getting that momentum, okay? And you can see the real problem here for PayPal, right? Despite all the optimism and this new agreement they have for Amazon, we still don't have any change in the FY1 estimate for December 2021. It's literally coming in at 0. So the estimate for December 2021 a year ago was 346. It's still 346 this time this year, okay? That's what that's telling us. Same thing for F2. It's only up 1.4, and you can see that it's actually trended down, okay? So the moral of the story here is it's not just global payments. It's not just Fiserv. It's not just Visa. It's not just Mastercard. It's PayPal. It's all of these guys. We look at Western Union, okay? 3.5, 0.9, right? We've seen this play out before. This is literally the same type of EPS estimate revision stall that the rest of the companies are experiencing. And we start looking at Stone Co and PagSeguro, where the Brazilian government is cracking down on the FinTech space. You can see they're down 43% and 23%. Obviously, a lot of competition with Mercado Pago for Mercado Libre down there as well. But you can see here for PagSeguro, F1, F2 down 15% and 18.2. Okay. So what is causing all of this growth compression and poor guidance, right? So the idea is it's all about consumer sentiment, right? So the most recent read for the Michigan Consumer Sentiment Index tumbled to 66.8 in November. That's the lowest read in 10 years. Inflation concern was high on the consumer's list of concerns, and that was 1 in 4 reporting scaling back their standards of living. We've also got COVID stimulus checks that are ending, and we've also got the Great Resignation also gaining steam with millions of people leaving their jobs. And this is what is literally being cited by these companies in giving their poor guidance going into 2022, okay, or soft guidance, I should say. So what I want to do now is I want to shift focus to the valuations themselves. Whenever I say valuations, it's literally price relative to something. We could look at price to sales, we could look at price to earnings, price to cash flows. We're going to keep this easy, and we're going to look at price to earnings on a trailing 12-month basis. And I'm going to give you a really easy tool in the research system to basically do hypothetical analysis on some of these names. And you can obviously do this on your own in a spreadsheet or with a calculator. You don't necessarily need the Zacks research system to do this, but it makes it very, very easy. So when you come in here to valuation history price PE F12M, and we'll just start up here with global payments. What I want to do is pay particular attention to what happened pre-COVID relative to valuations post-COVID and kind of where we're at right now. So you can see the collapse or the valuation compression in global payments, putting us in right here at about a 14.5 PE. And you can see that our model price of 131.79 equals the actual price, right? So the idea is we would be able to hypothetically move this PE ratio up and down using this arrow tool, and it'll give us a revised model price and an appreciation potential here. So hypothetically, right, we've seen by looking at the price and earnings chart that this thing is really oversold, right? We haven't been at this level of PE in years, probably all the way back to 2014. I'm just looking at the distance between the blue line, which is price, and your earnings line, which is orange. So we've literally just, again, eyeballing this here, we're right back to about here, end of 2014. We haven't been this cheap in like 7 years, right? So again, the idea in coming into this PE chart, and to get it over to a bar chart from a line chart, I just toggle between these two here. Actually, this is a really good opportunity to take a look at this relative to the S&P 500, because this is really what you want to do to see this valuation just kind of collapse relative to the S&P 500. You'll notice that it tends to bounce off that S&P 500 valuation, but we've literally just broke trend here. And this is all based on that consumer confidence, that consumer sentiment that's been on the slide, okay? So to quantify it, what would it mean in terms of the opportunity if global payments were to literally just revert back to trend, which at some point we would expect it to do, right? I mean, it's an earnings certain stock. Once consumer sentiment, consumer confidence rebounds, we would expect this to return. So we can hypothetically model this by switching it to a bar chart and literally just activating the arrow tool and then just move the PE ratio up. You can see we're sitting in the 16s now. I'm just clicking this up arrow. I'm using the arrow on my keyboard actually. But what I want to do is I want to kind of get it in somewhere in this range between where we were pre-COVID, 18, 19, 2017. So we can set it somewhere between a 24.8 and a 22.05. Let's just set it to like a 23 multiple. Let's just say that it reverts back to 23. Let's say that growth isn't hit too hard. We just haven't had any momentum as of late. That means that at a 23 multiple, the model price would be 208. Okay, we had a 52-week high of 220, so this is very reasonable. That would be a 58% appreciation. Now, keep in mind, this has a Zacks rank hold, right? You've seen the estimates are stagnant, right? So it's not like we're going into this major growth spurt. I'm not recommending everybody just rush out and buy these stocks. We're modeling this stuff hypothetically to say, look, we do expect global payments at some point to rebound in their growth trajectory. They've been growing this way for in excess of 20 years. And you can see that these valuations tend to ebb and flow based on this concept of consumer confidence and consumer sentiment. And if we were to get a reversion in valuation, what would that look like? That's what we're discussing. So this reversion in valuation would look like about a 23 multiple, that same exact multiple that we saw here between 2017 and 2019. Again, this is your high, your low for the year, and then your median points here in red. That would be looking at almost a 60% appreciation. So we want to model this. We want to kind of keep going with this just to kind of get an idea of where we're at in the space in terms of discounting. Same thing with Fiserv, right? You can see a much tighter range. Fiserv obviously managing the Clover network of merchant services, the swipe terminals, and they just run a really, really tight ship over there. And so if we activate this model here, we bring this up and we'll just model right where we were right around 2018. You can see that would be sitting right at about a 22.6 multiple. That'd be a 42% increase for Fiserv just on a reversion to trend. And you can see what that looks like relative to the S&P 500. You can see where we broke through and have been trending down. So again, throughout its entire history, we've only had a couple breakdowns. It happened here 09 and 10, and it seems to be a common theme for Fiserv coming out of these types of recessionary troughs. And here we're doing it again, just like we did. But it did revert back and ultimately did just fine and actually led the S&P 500 for years in terms of valuation. So interesting scenario here playing out. American Express, in order to get an appreciation for what's going on with American Express, you need to look at it relative to the S&P 500 here, and you can see that that's just gaining momentum. On a relative basis, what that looks like, trading at a trend of 0.86, its median is 0.96, so it's actually still trading less than its median. But keep in mind, we've got that recession period in here. Anytime I do evaluation work, I like to look at a 20-year trend, and you can see that here. And I like to look at that post-Great Recession. So you can see that it's actually a little bit rich, trading at about a 6% premium over its median of 0.8, okay? So if we move that to a bar, bring this back out to 20, you can see that we're pretty well within trend here. We're not going to go ahead and model that, okay? I want to skip down to Visa very quickly. And it looks like I lost my tool. Let's see. There we go. Activate it back. Got to go to the absolute, not look at relative. So I'm going to go ahead and turn that off, because when you actually make it relative, you lose your valuation tool. Okay. We could go back and take a look at American Express right now. I skipped over Discover, but at any rate, if American Express were to actually trend back to its pre-COVID levels in terms of valuation, we would be looking at a decline of, and I'll just hold that arrow key down on my keyboard, about 29%. Okay, so American Express obviously been a pretty large beneficiary of COVID, and you can see the implications there for valuation. So we've had this trend and we've had this run up, and again, I'll show you what that looks like in terms of a bar chart. Okay, we're at highs for American Express we haven't seen here in 2008, 2009, and this was more likely due to an earnings trough more than anything. So we really are trading it at a significant growth multiple, and you can see that here. Okay, so we'll go back to the PE chart. We'll go to our next stock, which is Discover, activate the bar charts. And again, Discover is sitting right at about fair valuation. And the reason for that, obviously, is it literally just tends to trade for whatever earnings are being delivered. And it literally just tends to hover right around that PE multiple of 10. And that's the beautiful thing when you're looking at the price and earnings chart here. Whenever the blue line pretty much runs up against the orange line, is trading at a multiple of 10. Okay, so not much going on there with Discover. Basically, the buy side is going to pay for exactly what Discover is able to deliver and not a penny more. There's just no multiple expansion at all. When we look at Visa, again, we get into that situation where they were a beneficiary of COVID, and we can see that here. We can see that COVID run up. Interestingly enough, it helps to look at that compared to the likes of PayPal. We can see that same thing. And I think if I go ahead and make this a relative, you can kind of get a little bit better story here. So we can put the S&P 500 up here, and you can see how that actually looks. And this is that valuation multiple expansion for PayPal and others that I was warning about during COVID that may end up being reined in post-COVID. And sure enough, that's what we see. I started sounding the alarm bells off on this in Q1 of last year, or this year, I should say. So we'll go back to Visa, and you can see a similar scenario playing out for Visa. You can see a similar scenario playing out for Mastercard. So a lot of this stuff that we're seeing in the space, again, not company specific, but more industry specific. And that's the real lesson here. So when you get a client that calls you up on the phone, they're saying, hey, what's going on with Global Payment? What's going on with Fiserv? What's going on with PayPal? Or any of these names? it's helpful to go through this type of exercise to orientate yourselves with all aspects of fintech or whatever industry that company that's under the microscope is in, before you try to attribute any price change or valuation compression or expansion that could be directly related to something specific with the company. And that's definitely not what we're seeing here. Okay, we're seeing something more industry wide. So we'll go back to PayPal and we'll go back to our bar chart. And this is an interesting one here with PayPal, because this is one that I love to do hypothetical valuation work, because they were obviously a huge beneficiary of COVID. This thing literally trading at a median PE of 42, let's call it. We've got 41.88 and 18 up to 42.08 and 19. And then it literally just shot up, and you can see this huge valuation range for 2020 and 21, but it's been on its way back down now. So the question is, what happens if we were to get back to a 42.08 PE? So again, we can model that by simply bringing that arrow tool down to about a 42 handle, and you can see that the model price is about $181. So an additional decline of about 15% brings us right in line with 2018 and 2019 valuations. And with growth slowing, you have to ask yourself, is that a possibility? And obviously the answer would be yes. And specifically if this joint venture they have with Amazon doesn't work out next year. Note that it has a current Zacks rank of sell, and we saw those EPS estimates that in fact trending down when we looked at the EPS estimate revision history. Okay. So we'll wrap up here with Square. And again, they just became profitable here a couple years ago. So not a whole lot we can do there analysis-wise. Western Union, if they can get back to trend, perhaps some opportunity here. This would be really long-term. Again, Zacks rank of a hold, telling us that not a whole lot of opportunity here in terms of upside in the near term. But if we were to get back to trend, we just put this PE multiple right around the 10 range. You can see that would be a 31% increase off of current pricing, a model price of 23.47 versus a price of 17.83. The reason I picked 10 multiple here, not only is it roughly the median, but you can see that it traditionally has had really, really good support off that F12M of 10. And that's obviously where these two lines are crossing here, specifically if we lag this right there. So you can see that traditionally it bounces off here. We've broken through here in 2012, and obviously we broke through it in the Great Recession. But that seems to be a pretty good assumption that at some point, if the space does in fact recover, that we may end up reverting back to that. But we don't know. Again, we're just speaking hypothetically here. So let's just briefly mention StoneCo and PagSeguro. Again, more political risk here than anything with the Brazilian government cracking down. And that's really the message with these super speculative fintech stocks that you'll find all over the world. Notice that StoneCo is a Zacks rank sell and PagSeguro is a strong sell, right? So these estimates have really reined in. We've seen that. And a lot of that is obviously due to more geopolitical type risk. So we can bump in here and take a look at what this valuation range looks like. But again, these things are speculative in nature. And you can see if we get down to pre-COVID levels, we've still got a little bit of a drop that we can take for PagSeguro. So we can model that. And the cool thing is that in the system, right, you can do this with anything: price to sales, price to book, price to cash flow. It doesn't have to just be PE. So here's roughly your 24 handle on PagSeguro sitting at about another 20% decline. So Zacks rank strong sell. Could we get there? Potentially, right? That's the risk. Same thing here. StoneCo, obviously a huge beneficiary of COVID. What would happen if we actually reverted back to pre-COVID levels in terms of PE? And again, activate the arrow tool and bring that right down into range, which would, it's about a 7%, maybe 35.3. We're sitting at 32. So roughly 35.06. Yeah, it's actually probably fairly valued at that point. So it looks like we've reverted back to that valuation for StoneCo. Okay. So you can kind of see where these pressures are coming from in this particular group. So So I hope I've given you a different perspective on how you can quickly vet a situation, really any situation, when a client or anyone calls you on the phone and asks, hey, what's going on with a specific stock or what's going on in a specific industry. It's really, really important before you try to, start pointing the finger specifically at a company to try to determine what outside forces that are more or less industry-wide might be impacting all of these types of names. And that's really what we have going on right now with Global Payments and Fiserv, our two ECP family members, not necessarily company specific, just more industry-wide valuation contraction. So not as concerned about that. If you found this video helpful, please hit the like button below and be sure to subscribe for future videos. If you have any questions or ideas for future videos, please leave a comment below or email me at tnyland@zacks.com. You can also follow me on social media. I'm on LinkedIn and I'm on Twitter at Tim Nyland. If you're interested in getting started with advisor tools or the Zacks research system, or if you're looking to upgrade your current subscription, please contact our world-class support at advisor tools at zacks.com and zrs@zacks.com. Thank you again for watching, and I'll talk to you all next week.